There is no day as joyful as payday, and if there is any day workers really look up to, your bet is as good as mine. It's payday. Sometimes the joy of seeing money in our account overshadows the important task of planning and determining how to appropriate those funds to meet our financial goals. But always remember that when you fail to plan, you are actually planning to fail. So as you eagerly anticipate the next payday, kindly take note of these things. These payday routines is going to transform your finances. Number 1, be your own accountant. Most people are so interested in the cash that they don't take the pain to check if what they are actually receiving is the right amount. It's important to regularly check those calculations and payments. Know how much tax you're supposed to pay, SNAP deductions, and any other item that has the potential to affect your salary. After checking these deductions against your net pay, do the necessary checks to ensure that the right amount is paid to the right organization. For example, check your SNAP statement if you contribute to SNAPs to make sure you have been fully covered for the month. Make sure your PAYE or tax is paid to the government. Ensure that all necessary payments and the right amount, such as bills and loan repayments, are correctly accounted for. This step helps avoid missed payments, which can lead to late fees and additional interest charges. Again, it prevents future problems relating to your retirement fund and tax payments. Number 2, identify your baseline and draw a budget. The foundation of any effective payday routine is a well-structured budget. Before spending your hard-earned cash, take the time to plan. Begin by identifying your baseline, which is the minimum amount required to meet your basic needs within a month. This includes fixed expenses such as utilities, groceries, transport, food, etc. Once you know your baseline, compare it to your salary. If your baseline actually exceeds your salary, it's time to look for additional income sources. Do you have a budget? If no, you're in the majority. This practice of not having a budget often leads to financial stress and overspending. As Dave Ramsey wisely said, a budget is telling your money where to go instead of wondering where it went. By giving every cedi a job, you can ensure your money is working efficiently. And this leads us to the third important thing to do. Give every cedi a job to do. Sometimes we call this the zero-based budgeting. This method involves assigning a job to every cedi, dollar, yen, no matter the currency that you earn. This means that each part of your income has a specific purpose, such as paying bills, saving, investing, donating, etc. You name it. For instance, you can set up automatic deductions for your savings and investment accounts immediately after payday. This way, you prioritize your financial goals before any type of spending. What is left can be allocated towards smaller spending goals or entertainment or any other thing. This approach ensures that your money is accounted for, reducing the likelihood of wasteful spending. Number 4, pay yourself first. I'm sure this is not the first time you are hearing this, but you keep hearing it because it is very, very important. One of the most important principles of sound financial management is to pay yourself first. This means prioritizing savings by setting aside a portion of your paycheck before addressing other expenses. By making savings a non-negotiable expense, you ensure that your financial security doesn't take the back seat. Automating your savings helps you avoid the temptation to spend the money elsewhere. As Warren Buffett famously advised, do not save what is left after spending, but spend what is left after saving. Number 5, don't spend more than you earn. A critical rule of financial health is to avoid spending more than you earn. This principle prevents the accumulation of debts and promotes sustainable financial habits. Many people fall into the trap of living beyond their means, which can lead to an unsustainable debt and financial difficulties. People do this by spending money before they actually earn or receive them. How? By buying on credit and accumulating debt. If your income is not matching your needs and wants, focus on increasing income instead of accumulating debts. Once you get into the habit of spending more than you earn, it's hard to stop. Using financial apps to track your expenses can help you stay within your budget and prevent overspending. By following this rule, you can maintain financial stability and avoid the stress associated with debt. Before we end this video, here is a recap of the 5 things you need to do on Payday. 1. Be your own accountant. 2. Identify your baseline and draw a budget. 3. Give every CD a job to do. 4. Pay yourself first. And finally, don't spend more than you earn. I know even before Payday, you will start planning towards it, and you can't wait to right some wrongs this month. Thank you for your time, and I'll be waiting for how well you perform this month. If you found this information helpful, don't forget to like, share, and subscribe for more financial tips and advice. Thank you.